What's up everybody, Tom here with another video. Well guys, it's that time of week again. It's time for us to use our top-down technical analysis approach together to take a look at the S&P 500, Nasdaq, gold, Walt Disney, and others to try to get a better understanding of what's going on right now in the markets for the week ahead. Let's get right into it. Stay tuned. Alright, so one of the best places for us to start is by having a look at what moved over the last week. We can see it was a bit of chop on Friday. Some things doing well, some things not doing so well. Disney was the notable one. We'll be taking a look at the charts later for that, but they announced some pretty big blockbuster Marvel and Star Wars franchises coming back out, and we did see some selling pressure through other sectors. If we click on the 1 week performance, you'll notice here, again, it wasn't really a strong week in any particular sectors other than healthcare. And overall, it was just other couple of little areas like the tobacco area and of course Disney that were the standouts for the week. Let's take a look at Friday's trade now. So we saw some selling pressure come through the first part of the session, followed by some little bit of buying pressure into a Friday. Now this has traditionally been a fairly bullish kind of pickup in the Friday time. Why is that? Usually we see Wall Street sell into Friday if there are concerns over the weekend as people move trades out. And then of course, there's also a lot of selling pressure coming through in the markets. We have some big news coming out this week, including options expiries. So stay tuned to our channel and possibly subscribe if you enjoy our videos to find out more about that, as we have a key options expiration happening this week a little bit later on. What about the actual sectors though? Well, I thought the best thing to do this week as we're coming close to the year end is to have a look at the sectors that have performed well this year. Notably, of course, we know technology has done well, but technology really hasn't moved that much since September. It hasn't been that hot sector. It's already had its move. We've been talking about XLY a lot as well, which is consumer discretionary. And I think a lot of eyes are going to be on that one, especially if we don't see stimulus. This has been a common theme. We haven't really been big on XLY as a sector for the last couple of months due to the fact that we believe there is some issues there if the US does not approve stimulus. Some other areas though of note now that are getting a little bit interesting is we've seen some stagnation in things like utilities. We've also seen some pressure come on XLRE, which is the real estate area. So they could be possible entries and areas that you may look for if you're trying to find value in what is a very tough market to find value in. We'll be talking about that more as well throughout this week. So what's the big news this week? Well, probably stock market uncertainty, which is running decently high heading into the Fed's final meeting. Now, usually we've seen bullish pressure come into the Federal Reserve's meeting and then a bit of bearish sentiment after Jerome Powell comes out and says whatever he says. Jerome Powell has this uncanny ability to create instability in the market, at least for the shorter term. So will that be the same this year? We've got the Fed's meeting for the final policy meeting of the year, December 15th and 16th. And there are some concerns here. Something like Market Watch, if you want to read this article, may be worthwhile taking a look at. We don't really like to get stuck into too much of that here. We're really about more the price action of the charts, as what the price action of the charts are telling us is going to be the key. We'll be looking at our top-down approach throughout this video as well to try to get an understanding of what the market thinks about this Fed meeting. Now for the CBOE put-call ratios, this is something we look at all the time. We get an understanding of whether there are a lot of negative sentiment or positive sentiment in the market. Something has happened here that has not happened for a while. We almost have a 1 reading on total put-call ratio in terms of the market. This is pretty high. So last week we had more calls open than puts. Look here, calls now 3.124 versus 3.023. And even the SPX, 1.88 reading there. So a lot of puts being opened off those last couple of days of slight negative sentiment. There is clearly a lot of bears that believe this market is possibly overpriced right now. Fear and Greed Index, the oscillator down here, still has a very high reading on it, showing that there could be further downside in the market. And when we start to get into our technical analysis levels, again, the put-call ratio has really spiked off those lows we always look at in the markets at about 0.6 and moved all the way up here to a 0.975 reading. So it's not telling us enough about the market right now on whether it's fair price or whether it's overpriced. And we're also not getting that contrarian indicator that we like to get, where usually if puts are really, really low, there's a great tendency for the market to, of course, sell off heavily due to the fact that no one believes it is going to do so. Let's move now on to the US dollar index, something that's been very weak recently, and that was all due to getting through that 92 technical level. This 92 technical zone has been holding the US dollar up for quite some time, and we knew that when the market closed below here, it would signal further selling pressure all the way we were expecting to potentially 89. And we think the Fed really wants to push the US dollar lower as well through its policies and other things. That's really what the Fed has been signaling to. That doesn't stop the US dollar from not trying to get back up though. If we take a look at this chart here, you'll notice they're starting to get some market structure around this zone. And where's our 20 exponential moving average? Well, it's right here. The 20 exponential moving average was hit once, it was hit twice, and it was respected both times. So if the market gets up this week to, on the daily, the 20 exponential, do we think it would respect a third time? Here's our 1, here's our 2, here's our 3. It makes some sense for selling pressure to come back in there. If we go down to something like the 4-hour and have a look at the way that the market is structuring up, let's bring down a horizontal line here. You'll notice that our 91,154 area is what's going to signal further buying pressure. We can also take the distance using the trend line here, potentially around this structure, extrapolate that out, put it on the chart, then go to the daily, and we'll notice that it's kind of signaling a little bit higher than that 20 exponential. So maybe that's where the wick gets to. So this zone here is really what we're looking for. And if we're going to expect further selling pressure in the stock markets, I wouldn't be surprised at all to see the US dollar spike through here and get up to somewhere around this zone. Notice this line here lines up perfectly with that little bit of wick action we saw in September period. So US dollar looks like it could be going long, at least for the short term. What does that mean for gold? Well, gold has been hovering around this 1824 to under 1850 zone. 1850 is clearly the resistance area here on the shorter time frames, 4-hour here, and the 1820 area is clearly support. If we dial down into a 1-hour here, it'll become even more clear how good these levels are. Let's put a horizontal line now on the 1823. And notice we have quite a few touches around this area. If the market is to break underneath here for gold, it would sell very hard, I would think, possibly down to the 1760 structure again. And if it breaks long above the 1850, I really think that it probably won't even stop at the 1870 this time. It will continue moving higher past that area. We're now in a good level of structure like a channel. And the range is key, which is the distance between these, but at the same time, just that area of sentiment. Remember, 1850, if we look on the daily, was such a heavy level of support that if it gets back up and through here, it's probably not going to stop at the 50 moving average on the daily. It's probably going to continue moving up to the 1900 and then possibly even all the way up to the 1950, 1960 zone. Gold will be certainly worthwhile watching around the Fed this week. It'll be a very interesting, potentially volatile time for gold and silver. Silver's doing the same thing, structuring between 2360, 2350, upwards of around that 2425 zone. Previous resistances all the way across here. We'd want a body close either above this zone or a body close below the 2360. And again, if we see selling pressure come through here on silver and it gets below that area, expect potentially a conservative kind of pullback to the 2360, followed by some really hard selling. If that happens, we could see a 22 reading on silver even this week. That is actually possible due to the fact that there's not that much market structure holding up silver after this point. Few people will probably point out as well that this could be construed as a head and shoulders with the left shoulder, the head, and the right shoulder here. And then, of course, our neckline across 2360. So there's a lot at play here for silver and a lot at stake for the bulls of silver in terms of the shorter time frames. We've almost got 2050 cross between the two moving averages. Everything is pointing towards a break of 2360 being very significant for silver traders. Cryptocurrencies now, what's going on over there? Well, we have a pretty large move here, still holding up. This is the weekly for Bitcoin. We're trading at 18,000, around 1800 right now. If If we go down to the daily, you'll see the 20 moving average is barely holding this thing up with a bunch of buy wicks around that 20 over here. And we go down to even smaller time frame, which is where you have to be trading right now. And you'll notice that a new high or new peak has been formed. And this is really signaling further buying pressure. For people that are looking at getting in, possibly back testing this resistance, where two moving averages, the 20 and the 50 again, could act as support, and then push it back into the 19.2 to 19.4 zone. And if it gets above this 19.6, I would not be surprised at all for it to not only hit 20,000 for the first time in a long time, if not ever, depending on the exchange, and bust through that zone. So things are looking pretty good here for Bitcoin, but it really needs to come down a little bit, have a rest, buy off this 18.5 zone, and then of course move up to the 19.4 to 19.6 area and bust that area. If it does that, further strength for Bitcoin throughout the next week. Ethereum's a little bit of a different story. It hasn't been as strong or as bullish as Bitcoin. We can see here previous resistance at 576, 580 still holding. Little bit of a rejection here on the candle. And if you're looking at getting long on something like this, you'll probably be looking for it to break through the 1576 zone, close on a significant time frame like a 4 hour, come back and retest it, and then it goes into our wall. Our $620 resistance wall here, guys, is the zone that Ethereum is going to struggle through. But if it does get through there, possibly 700, maybe even the $800 resistance area. That's that area that we've been looking at together for so long now on the channel. So will $800 be something that we see by the end of the year? It's certainly possible if we see another flurry in Bitcoin and of course the alternate coins. All right, well, let's take a look now at the stock markets as a broader whole. This is the Nasdaq here. We've got the Nasdaq futures, and take a look at this 20 moving average. This just shows why 20 is so powerful. One touch, two touches, three touches, now fourth touch of the 20 exponential moving average. And each time it's been respected. I'd like to focus in on this move here, specifically around the price action based on this 20. Twice now it has rejected this zone. And this is actually the lead thing that I'm going to be looking at this week on the charts. Why is that? Because we haven't quite yet made a new high above these rejection wicks. If we do that and we see momentum follow through, as you'd know on this channel, guys, we love to see that. 2 wick rejections off the 20 followed by a new high, momentum going in the area that we want it to be going in, is such a positive thing for the markets. But the beauty of having this kind of zone now is if we fail and we close, and this time we need to close below these previous wicks, this is such a negative bearish signal. Twice it was bought off here, and if it closed underneath here, what that's saying is that the buyers have completely lost control of the market. So if you've got your big bear boots on this week and you're bearish on the market, you are hoping for it to get under this 12,200 zone, close below there on a time frame such as the daily here, and that's going to signal further shorting into at least the 50, if not even lower. That's really going to be the big interesting point of the markets this week. A close below these 2 wicks. Pay attention to this. It's one of those signals that you see quite often, but it's quite significant, and it's also statistically probable. So something that's worthwhile always checking out on your charts on the Nasdaq. S&P 500, very, very similar. We've had this ascending going for quite some time. It's come back to the conservative area and bounced off that zone. And you can see now on the 1 hour chart here, it's really finding a little bit of resistance at 2 moving averages. Again, the 20 and the 50 moving average acting as some resistance here. Let's go out to the weekly and just put all this in perspective on the SPX, the real market. So we'll get rid of these lines, and then we'll think about where the market is right now. One of the things I like to do is, if trying to pick maybe a pullback that's going to go on in the markets, is by taking a look at the Fibonacci levels and then seeing where the retracements would be. Now, if it retraced from this point, it came down to, let's say, a 35.20, which we've targeted a few times now, we'd have previous resistance bodies, we'd have resistance, and we would most likely be meeting probably a 20 exponential between the 38.2 and the 50 zone. So for anyone hoping for the market to be down here already, there is going to be quite a lot of pent-up buying pressure if it only gets down to just around here to in between here. There's going to be the 20 for the first time, again, a respected level and zone, and quite a lot of buying pressure through here. So for this week, if you've got, of course, the bearish kind of side on, we're targeting in this zone, could happen very, very quickly. And this will be met most likely by Wall Street buying pressure and just retail trading buying pressure as a whole. Onto the daily as well, looking at what's going on. First kind of almost touch of the 20 exponential has been reached. So again, I think it's the Nasdaq that's going to be leading us in terms of sentiment here. New high or close below those wicks is really the areas that we want to look at. So Disney had a massive announcement. I think that helps with sentiment as well. They announced 10 new Marvel TV shows and movies and things, and 10 new Star Wars ones as well. That's massive for their subscription service. They had some great announcements coming out, and we could see that followed on with some big trade here. Disney was up 13.59%. So a few people have asked me about this in the channel, and they've said, well, what do you think about this? Well, I'm a massive proponent of Disney. We've talked about it quite a few times ever since really down here during the June kind of lows and March lows. But from this kind of height, you usually do see some movement down. And of course, now the 150, 152 zone will be acting as resistance and a support area. So if you're bullish on Disney, it's awesome that this is in. If you're in, great. But I'm not so big on getting into the hype of the news. I think it's awesome, but they do have some problems with the company still. So I would expect some kind of pull up, pull down, and some kind of slowing effect of the market after big news events. Just look how Disney's reacted in the past. Big news, starts to consolidate, quite a few months of no returns after that, big news, and then of course the crisis. So just be careful when it comes to trading these types of markets. Quick one on oil. Oil has broken and closed above that 46 resistance line. This really now exposes 51. Have a look at one of our videos from last week, and then you can have a look more at why we believe that. But oil's looking quite good. And if we take a look at the calendar for this week, we do have some OPEC meetings, which should be notable. Obviously, FOMC statements, GDP reports, which mean not that much to the markets. We usually know that. Monetary policy statements, heaps of news on Thursday, December 17th for me here in Australia. Remember, go to forexfactory.com, load up a calendar, and then set it to your time frame so you can get some more information about things that are coming out during the week. All right, well, if you enjoyed this video, guys, please remember to, of course, smash that subscribe button, give us a like, and set some alerts if you want to have more information from us. We should be live streaming this week, but it won't be our usual Monday session. I will announce it on the channel so everyone has plenty of time before we do it, and we'd love to see you there. So good luck this week, and of course, make as much money as humanly possible, but in the safest way as well. All right, see you for now. Bye, guys.